Welcome to Trading Lounge and the Asian indices for the 6th of January. So this is the banking sector. We've looked at this chart last time, so the XXJ here, and we're considering this particular move down through here as an A wave, B wave and C wave down to here, then up for wave 1 and pulling back for wave 2 and then moving to the upside here. So this here is of interest here, and as I mentioned we went over it last time, but I just want to move over it again. And the current move down from the high here, we can look at this here as I mentioned, an A wave, a B wave to here, and then we're looking for 5 waves down through here. So the 5 waves are wave 1 and 2 here, and then 1, 2, 3, 4, 5 for the 3rd wave in this area here. The A, B and C back for the 4th wave of 1 lesser degree here. This is corrective here, so that means that at some point this will move, this low will be taken out. So it's putting the banking sector in a bearish mode, and it does appear that this move down through here is 1 and 2 and 3 and 4 and 5, so an impulse wave. So we're going to see a rally which has started and then we're going to see further downside here. So it's likely that we're going to see from the top here, we're going to see 5 waves down here, moving down further. And as I mentioned, the medium level here at 6,500 is something that we'll be looking at here. No, it's not populating, but it's still in this bearish mode. So banks are still in this, banks still need to make a new low here. Well, we have the mining sector doing the opposite now. Well, it's normally the case anyway. So with the mining sector, let me just find that, the XMJ here, it's obviously trending to the upside here. So there's a couple of things that we can look at here in this. This is it here, so obviously a different situation. And the reason I'm sort of going over this is because the ASX200, if I can just bring that up for a moment, is basically traveling sideways here. It's creeping to the upside with overlapping wave structures here. So it's in a rock and a hard place between the materials sector and the banking sector. We'll come back to that. So this materials sector here, we do have 1 and 2 and 3 and 4 and another little 5 waves in here for an impulse wave to the downside. So it's there's 2 ways we can look at this. We could look at it as, because we got 5 here, that means that after a rally and a 3-wave rally here, we should get another 5 waves down, which we have got here. It just hasn't made a new low, that's all. So I do think that this is the A wave, the B wave and the C wave here for that, and then this move up here as a 5-wave structure. So we could count it up as 1 and 2 and 3 here, an A and a B and a C for the wave 4, a bit more complicated than a simple wave 2, and then up for wave 5. So we've got 5 waves here, and then we've got the corrective move back, and then we've got this move up here. So I believe that this move here is corrective as well, and we'll see further upside here. It may get a bit more complicated here, but this trend here as a 3-wave structure here is not complete just yet. Obviously we're at resistance at 1400 in the supply here, supply just meaning sellers, so there is resistance there and it's going to play out here. So we've got this market moving up and we've got the banking sector moving down, which leaves the ASX200 between a rock and a hard place. When we see the banking sector, the finance sector and the materials sector moving in the same direction, that's when you'll see the XJO really push to the upside. So within this structure here, there's a couple of things here, that the move down through here appears to be in 5 waves here. And we could consider this an A wave here, B wave here and a C wave here, but we don't have 5 waves here. We only have 3 waves here. So we've got an impulse wave up here, we've got a corrective wave here, and we've got an impulse wave up here, that not a very nice one, but struggling up there to that high here. So this really counts here as an A and a B and a C wave here um, because this structure here overlaps this one here. So it's really, I just can't sort of figure it out. There's parts of it I can figure it out. Like as I mentioned, we've got this down through here and then 3 waves back up here. So that's a corrective wave, and then we can count 5 waves here. So it's possible that this market can move up from this point here. Because we've got an A and a B and a C wave here. But this C wave here hasn't quite made a new high here, but it could be just 5 waves down here, then coming back to the 61.8% mark here at the 6,800, and then have 3, 4, and 5 here. So we've either got that, or we're going to move straight up from this low here. Now, as I've mentioned last time, that the 6,800 here, if that becomes the support, then that's a confirmation that it's going to be bullish at that point, and we'll be moving up from that point there. So we just need to be mindful of what's going to occur in this little area here. So in a nutshell, I don't know what's going on here. We can have an A wave here, a B wave up here, and then a C wave down here, and then this wave 4 here becomes all the way over here for this, and we still have another move to the upside here. The US markets are bullish. They're going to be bearish at the moment, especially why gold is going to the upside, so they can work in opposite to each other. So this market, gold market here, wave 1 and 2 and 3 and 4 here, and going up for wave 5 between 1600 and 1650 area through here. So while this is pushing up through here, it's going to make the equities more bearish or corrective within their spaces, and that's what we're expecting. We're expecting the S&P 500 and also the banks and so on, US banks, to go into a wave 4 as well, while this is going to the upside. So while this is going to the upside, the US banks will be pulling back into a wave 4. I won't go into that now, I'll do that in the US video. So yeah, I've still got this dilemma here, but anyway, let's go in and work out what I do know and what I don't know. So as I mentioned last time, we've had this move down through here, which is in 5 waves, an A wave, and then we've had this move here as an A and a B and a C. Now, normally the B wave would come back up 61.8%, roughly around here. But you can see in this case, it's moved all the way up through here. This may even be 3 waves down here. If that's the case, then we've got a flat correction. A flat just means that it's flat, so it just comes back up to this point here and down to this point. But a flat correction is 3, 3, and then 5 here. So this could just get a bit uglier here. As I mentioned last time when we spoke, we weren't going to do any trades here because we were looking for a move up to the 61.8% mark, and then a move back to the 61.8 move here. So we'll spoke in here. So we weren't going to go long in here because we'd just get trapped. So that, even though I didn't know what was going on, basically, we could still work out parts of it. And because we understood that, we weren't going to trade that. So where are we now with all of this? Well, there's 2 ways we could look at this. We could look at it as all of this down here for wave 1 and back for wave 2 here, and then this market continuing down through here. Or we can look at this here as, I'll just copy that, as wave 1 here and wave 2 sitting here, and we can move up from that point there. So we know the banking sector is going to be moving down, and the mining sector can be moving up. So the question is which are we going to follow here? I think that we're going to be following the mining sector, but let's just drill in here further, and let's just look for trade setups within all of this. So our target to the up, this is a 1 hour chart, sorry. The move up through here was a little bit unclear because of the space in here, but we're looking for a move to come to the 61.8% mark, so that's good. It's pulled back to the 61.8% mark. It's moved up to the 61.8% mark. So any move really above this high here, we can go long at that point here, and any move below here would be bearish. So we can move this down a little bit to here, and in fact we can move we'll try and get a position in here a little bit lower as well. I'll talk about that on the tick chart. But on the bearish side here, just so you don't get trapped, it's normal for the market to come down here, bounce off that large number here, and then move back down and bounce again, and then bounce it down and then come through here like that. So once it's on this side here, then you can look to go short at that particular point. You know how that works. If you've been working with me for a while with the trading levels, you need to be on the right side at the right time. So what is the right side at the right time? Well, you take the closest largest number and you ask yourself, well, is that resistance yet? So as that moves through here, we never chase that going through here. We wait for the retest. And if that retest fails, which will be on lower volume than that move down through here, so you can look to the futures market for that. The volume on the volume that you see on Forex and the indices here is not real volume. It's just a volume indicator of how many times the price has changed. It can be relatively okay in smaller time degrees, but certainly not on daily and weekly charts. So just be mindful of what that is. But that retest here would send you down at that point. Coming back down to this level here, obviously there's going to be support here again. So when we look at the tick chart here, which will be 100 ticks, what I might do is I might just bring across my 20 tick chart. So we'll just focus on this little area through here. I mean, from this low here, let me just check. I mean, from the low here, it looks like we've got 1 and 2 here, and 3 and 4 and 5 here, and then an A and a B, and then 1 and 2, and somewhere in 3 to here, 4 to here, and 5 to here. So we can have a low in place right here, and we can move up from that point there. Just want to check on something. Sorry, I just brought the rest of the data in here. I was working too small, but from this low here, so we'll count 5 waves down here. So this move up through here that came to the 61.8% mark, I was counting this move, I can count that here, and I'll do that on the 20 tick chart, but the move down through here does appear to count as corrective here. This move up through here can be counted as 5 waves, as I just mentioned, but also we've got a bit of a high here, and it's very unusual to have this as wave 1 and wave 2 here with an expanded flat, with a an expanded flat correction. So taking out the top there. So this could very well be counted as an A and a B, and then 1, 2, 3, 4, 5 here. So as a corrective move, and continue down lower through here. So that to me is a little bit unsure. It looks more bearish, and it can come down. And obviously the US markets were down on close, but obviously this has been priced in as well. But with the cash opening lower, this is going to drag that down here. But just looking at all of this here on, this is 100 ticks here, just looking at that on 20 ticks here, this is it here. So it does count. So this is the move down. So we've got 1 and 2 and 3 and 4 and 5 here for 1 and 2. Now it's a little bit dodgy because wave 4 overlaps wave 1 here. So you could probably look at that in a different way, and I'll have to sort of think outside the box on that again. But 5 waves for 1 and 2 here, then 1, 2 and 3 and 4 and 5 here for the third wave and a fourth wave. So 1 and 2 and 3 and 4 and 5. So it does count up reasonably nicely as 5 waves for wave 1, and then an A and a B and a C back for wave 2 here. So this is looking quite bullish here, and as I mentioned before, it's, in both cases it's pulled back up to the 61.8% mark. So what that actually does, that gives us an opportunity to go long above this top here, because if that goes above there, then it's pushed up into higher ground at that point and we can go long, simple. So the other point is that on the 1 hour chart, we were looking to go, don't need that there. So we're looking to go long on these highs here. So in terms of the trading levels, we can look at this as the closest largest number here, 67, and then 10, 20, and 30, which make up group 1, subgroup 1. So if we get support here this time around here, we can go long from that point. But also too, I'm thinking that if support comes in on number 2 here, the 67.20, then get half a position from here and then get a full position on top of this level here. Obviously, I can't draw on that side, I'll draw on this side. So the market would come back up. If it comes back up to here, it could fail from there, so you don't want to go long there. If it makes the first high above the level, then it will make a little corrective move and then finally get up there and move up. And then you can take those highs out here on this level through here and here. So you can build a small position on a nice solid support here, and then you can look to add to the position over here. If this does drop lower from here, we start to get these as 1 and 2 and 1 and 2 in here, and moving down further down through here. It's only going to get a bit bouncy down here because this is already priced in, so the cash market can drag it down, but then it will bounce off this level here. So like I said, you have to wait for this to become the 67 to become the retested resistance at that particular point in time. Okay, that's all I can sort of say about this at the moment. Yeah, let's have a look at Hong Kong. I think I'll go to China first. So with China here, we've been counting this up here as a wave 1 and 2 here, and I just kept on moving through with it because we're getting a positive wave here, an impulse wave here, and then a corrective wave here, an impulse wave here, corrective here, and so on. So I've been looking at this as 1 and 2 and 1 and 2 and 1 and 2 and 1 and 2. And then I mentioned that, you know, we'd need to see the market move up quite strongly from this point. And well, it has moved up quite strongly. It's hit 15,000, which is a medium level. So it's had the arrival and it's had the reaction here. It can pull back lower in here as another 1, 2, 3, 4, 5 here, an A and a B and a C. You can pull back in here further. So it's in this bullish trend, but we'll just see. It's not going to be bullish for a little while just yet. It needs to have that correction here as an A and a B and a C wave coming back into here, and then probably climbing up from those points there. But understanding this here would reflect back into Hong Kong to a point anyway. So yeah, obviously Hong Kong's got its own sort of dilemmas. But just on the 4-hour chart here for Hong Kong, I don't see a trade here at the moment unless it's going to be short. So with Hong Kong here, from this low here, we went long coming up here, didn't we? So we had 1 and 2 and 3 here. We got out at 28 and wave 4, and then probably 1 and 2 and 3 and 4 and 5 here. So it looks like we're going to see some type of corrective move here to come back into this space here. So in the bigger picture, this would be the arrival here, the reaction here, the first high above the level here, and then we'll see an A and a B and a C correction here. And then over here, that will give us our long position again over here. We may be able to get a better position in at that stage. If you wanted to short it here, then you would need to leave the stop above the 61.8% up here. So once you get to the closest largest number, then just go above that. So I don't think the 1-hour chart can tell us much more with this. It does look impulsive down here. So what it can do here at the moment, it can pop back up here. It's just the 1 hour chart here. It can come back up to this area through here before going lower again here. So yeah, no, look, I'm not going to put in a trade here because it's not just yet anyway. Because it's typical, it looks bearish, and this is where you got to be careful because, I mean, how fast it came down is important. But with corrections, the market moves up. It's the A wave that comes down the fastest, then the B wave in 3 waves. So we'll probably see something like this, and then we'll see this come down here. So the C wave here, the A wave's the sharpest, the B wave, and then the C wave's on more of an angle here. If we see this at the same angle here as this one here, then we know that we have more of a bearish picture in there. But we should be able to, we won't do it now, but this little move up through here, we might be able to sort of get some better higher position in through here to short that higher up through here. But yeah, and obviously this all this through here is where the support is, so it's not like it's a long-term trending thing. It may be, we just need to, you know, if you're going to short it, then shorting it up here would be the way to go. Well, this 500 here, if the market moves up here, and let's just get rid of that. So if the market's moved up, it's come back. If it's going to move up here again, that's to the 61.8%, then we could use, because 5 is the second strongest number, so that 500 is important. So if it finds this as the resistance here, then you can short that there. That would be the safest place. Probably not the best place, but a safe trade would be there on that. And then you've got a good risk-reward ratio for this here, for that. Okay, India. Let's have a check out India. Sorry, there we go. So I haven't updated the tick chart here, so we'll just go to the yeah, rightio. So I've had a good run with this. We'll just go back out here a little bit further. Let's go back out a bit further. Sorry about this. Yeah, okay. So we can have a top in place here for this, as I mentioned before. I mean, I've got these counted in different situations, but it doesn't really matter. The main point here is that from this wave 4 here, this low here, we're looking for a move to take the top out here. So we've done that. We've traded this up here, which is fine. We've got the best of this, and it's quite possible. I doubt it if that's here like that, but it's possible as 1 and 2 and 3 and 4 and 5, and we're here, we're done. It's probably more likely that we have wave 1 up here and we're looking back for wave 2 here, and that can pull back 50-60%, so we can put that into here, and that can pull back to, don't need that. It's possible for this to have 5 waves here, 3 waves back up, and then 5 waves down here for wave 2 at this particular point. Yeah, so that's about it. Definitely there's a top being played out here, and so we could short this. So I've got this counted up here in different, I've got it all counting in 5 waves on each chart, but different colors, so different degrees of structure. So all that's complete yet. We don't have support there for that, so that's okay. I mean, the other point here that we got to be careful of here, just to make things a little bit more complicated here, it's possible that we've got an A and a B and a C wave into here for wave 4 here. I doubt it, but over Christmas, this hasn't finished very well here. We could even have wave 4 here, probably a better scenario as well. Just a little bit unsure about this top. That's probably what I'm saying. Just want to have a look at the tick chart here. Let's just see if we've got 5 waves here so far. Yeah, I need to pull that apart a bit further. It's not jumping out at me. But what we can look at here, from this low here, we've got an A wave, a B wave, and a C wave up to here, right? So then we've got wave 1 and 2 and 3 and 4, and then 1, 2, 3, 4, 5. So we do have a bit of a low here. So that's going to be quite good. So what we can do here is, I can't draw on this side here, so I'm going to go back to the 1 hour chart here, and we kind of know what's occurred here. So what we're looking for, we're going to be working the 12,200 here. So we know we've got a little 5 wave structure coming down here. It may come a little tad lower here, whatever, but we want that retest there. We want to see the market move back up, because if this is wave 1 here and coming back for wave 2 here, then we want to be able to be short under this level here. So we'll put that here. No, that's all good. So it's not shorting under this one here. Let's just get a bit clear on this. What we're waiting for here, okay, so we're waiting for this little move down here to finish, and we're waiting for it to move back up. So once that's in play, once you see that move, once you see another move going back up to 12,200, then you move that up under the low, okay, and then if it finds resistance here, then that's okay. We're on the right track here. All right, so you have to wait for that to play out. So we'll do that, and we'll see how far that can get us down. If with the trading levels, we've got 12,000, then we've got 1, 2, and 3 here that make up group 1. So I know that if this one here, the number 2 here, becomes the resistance, then the market's going to be pulled down to the closest largest number, which will be the 12,000 here. There will be problems at here, but it should eventually get through and move down lower into the 12,000. So that can be our target here for this. Yeah, so that can work out okay, but it's high risk. And the other point too, if I've got all this wrong and it's going to be a bullish market, we will be taking out this top here, and we'll be able to get a better position than that as well. But any support on top of this level here we will be going along from that point there. So we'll see how this plays out here for this, but I'm okay with all of this count. So let's just double check here to, oh, we know that that's the 50-60% retracement level here, so that's where our target is for at this stage. And we'll also have we might change that. We'll just have a look at the structure as it comes down here first, you know. Alrighty, thanks for tuning in. Cheers.